Analysts expected market turbulence in Asia and the United States, but it did not happen. Inflation in the United States did increase in February, but not as high as initially estimated. Since Thursday evening, the US dollar index has slightly advanced, as well as the Australian dollar and the yen. On Thursday evening, the US dollar index fell to a new weekly low of 91.37. However, by the morning, the US currency recouped its losses and rebounded to the level of 91.65. The fluctuations in the quote came after the release of US inflation data for February. The figure totaled 1.7%. However, market participants expected the worst, especially given the adoption of the new relief bill. The report has proved once again how hyperinflation could affect the forex market. Currently, the inflation rate remains within acceptable limits, so investors shrugged off fears. The expected long-term decline in the US dollar index did not occur. This means that other markets avoided volatility as well. Yesterday, the yen tried to escape the descending channel and break above the target level of 110.34. If it approaches this level, it may grow even higher. The likelihood of the quote reaching the target level of 110.34 has increased even more after yesterday's controversial ECB meeting. Technical analysis only confirms this forecast. The Australian dollar was expected to extend losses yesterday following the results of the ECB meeting. Yet, after a slight drop, it quickly changed the trend to an upward one. At the end of the day, it gained 53 pips. Curiously enough, now the Aussie growth is unlimited. It may even hit the level of 0.8010, which is almost a 2-month high. However, market sentiment is now determined by the US government's further stimulus plans. This is why do not forget about the possible impact of the fundamental factors on the market within the next 2 weeks. And that's all for now. We wish you a profitable deal. See you in our channel with a new video in a couple of hours.